So in this video, I'm going to talk about what three documents private money lenders expect to see. Hi, my name is Amir Khan, and I have raised over $700,000 from private money lenders using self-directed IRA account and built my $1 million portfolio in 2 years. I have developed strategies, systems, and tools that have allowed me to raise private money for myself repeatedly. Not only I can do that for myself, I have taught my students how to do that successfully. So today I'm going to discuss the three main documents that all private money lenders expect real estate investors to provide. So the three documents. In this video, I will show you what those three documents are and how you should prepare them. Just for your information, some investors do provide additional documents which act as an additional layer of protection for the private money lender. However, I'm going to restrict for this video the three core documents that most real estate investors provide private money lenders. So let's start with the three key documents. The first one is the mortgage. This is a legal agreement between the lender and borrower. It is used to purchase or refinance a property. It lists all the loan conditions and terms. And I will go into more details after I give you a brief summary. Next is the promissory note. This is an additional document that states the borrower is promising to pay back a loan. It lists the loan conditions and terms as well. And finally, there is an insurance policy that is purchased for the protection of the property, and the private money lender is listed as a primary beneficiary. So now let me go through each of these a little bit more in detail. So the first one is the mortgage. As I said before, mortgage is a legal agreement between the lender and the borrower, and it is created when the borrower purchases or refinances a property. And here are the key elements of a mortgage. Number one, there is a borrower, and this is a party that is listed on the mortgage, and it could be an individual or a company like an LLC that is purchasing the property. There is a lender. This is the party that is listed in the mortgage as the individual or a company that is lending the funds to purchase or refinance the property. And then there is the collateral. The property itself is the collateral, and it is listed as the collateral in this document. And this is the main protection that the lender has, because if the borrower defaults, the lender has the right, because of this instrument, to take back the property via a foreclosure process. And also most of the document, the mortgage document, have terms and conditions. The mortgage lists the terms and condition of the mortgage itself that has been agreed upon. These includes terms of the loan, including the loan period, amortization table, showing the principal and interest rate that is to be paid, and when and how the payments have to be made as well. And a mortgage is prepared by an attorney. I'll actually go into a little bit more details, and generally it is between 10 to 15 pages. A mortgage must follow local jurisdictional laws. So how to prepare a mortgage? If you're closing via title company, the easiest way is to just let them handle the preparation of the mortgage for you. They will require all necessary information, and of course the information of the property they already have. They will need information of the lender and the terms that you've agreed upon on getting the loan, and they will prepare it for you. In some instances, the title company will not be able to prepare it for you. In that case, then reach out to a real estate attorney, and they should be able to prepare it for you. Next is the promissory note. As I mentioned before, this is a legally binding promissory note to repay a loan, and it lists the loan's condition and terms. And here are the key elements of a promissory note. Borrower is the party that is listed in the agreement as an individual or a company. Again, it could be an LLC. that is borrowing the capital. Lender is the second party that is listed in the agreement as, again, an individual or a company that is lending the capital. The debt. The agreement lists the property being purchased. It also lists the terms of the loan and the condition, and it provides legal proof of the debt's term, allowing the lender to sue for repayment and or sell of the debt. So as you can see, it is a different instrument than a mortgage, and it provides an additional layer for the lender. So generally, promissory note is just 2-3 pages long, and I'll talk about how you can get it prepared. So to prepare a promissory note, you can again go back to your title company and ask them to prepare it for you. Again, you will provide them lender information and terms that have been agreed upon. If they are not able to do that, you can reach out to a real estate attorney and they should be able to prepare it for you. Next is the insurance policy. This is the insurance policy that is purchased for the protection of the property. The private money lender is listed as the primary beneficiary. And here are the key elements of insurance policy. First, the deed holder. This is the party that is listed on the policy as the individual or a company that is going to own the property or hold the deed. Then there's the lender, which is the party that is listed on the policy as an individual or a company that is listed as a lender, and that entity or a person is known as the mortgagee. Now, this is one of the most important part of the insurance policy. It's called payment priority. If a claim is filed once this policy is in effect, the insurer pays the lender first to cover the loan balance. The remaining funds go to the owner of the property. I'm just simplifying this just for you to understand. That is the principle when you are giving these documents to a private money lender. That is what the expectation is. And another key element of having an insurance policy in effect is notice of cancellation. And the lender must be notified if the property owner cancels the policy and or fails to pay the premium. This allows the lender to force the property owner to keep an active policy in place at all times. And so how do you prepare your insurance policy? Get in touch with your insurance agent who writes insurance policies, specifically for investment property in some instances. However, you do have to provide them detailed information about the loan amount, lender information, and the coverage amount. And so that's basically it. I hope this video was helpful for you. I do have a free course that I offer for private money lending that you can do at my website, privatemoneyraisersclub.com. I hope to see you next time. Take care.